Tan Sri Muhyiddin Yassin has been acquitted and discharged by the Kuala Lumpur High Court, which struck out all 4 graft charges totaling 232.5 million ringgit against the former Prime Minister. Judge Dato Muhammad Jamil Hussain called the charges defective and said the prosecution did not clearly disclose any offence. According to the judge, the charges did not follow the NIISe Act 2009 as they did not stipulate how the alleged offences were committed and whether Muhyiddin sat in a meeting or influenced a decision to allegedly receive the monies he was charged with taking. Outside the court complex, Muhyiddin reiterated to the press that the charges brought against him were politically motivated. His lawyers told The Edge they will seek to have the remaining 3 money laundering charges withdrawn as the alleged abuse of power was the purported predicate offence. Meanwhile, the prosecution will be appealing the ruling and also seek a stay of proceedings over the money laundering charges. The EPF recorded total investment income of 33.19 billion ringgit in the first half of 2023, up by 39.7% from the previous corresponding period. This was after netting off listed equity write-downs. The retirement fund said out of the total, 4.79 billion ringgit was from mark-to-market gains in securities that had not been realised. These gains were mainly due to fluctuations in foreign exchange rates. As for the second quarter of 2023, total investment income more than doubled to 18.03 billion ringgit from the same quarter last year. Equity investments were the main contributor of income at 9.6 billion ringgit. EPF Chief Executive Officer Datuk Sri Amir Hamzah Azizan said the performance of global equity markets in the first half of the year was positive, led by a run-up in developed markets, notably in the US, which continued to show resilience despite the rise in interest rates. He said the EPF's agility and adaptability in its investment strategy paved the way for the investment managers to take advantage and capitalize on the market rally, which contributed to the higher return on equity for the period. Glostrext made its debut on the ACE market of Bursa Malaysia at 65 sen, or a premium of 242.11% over its IPO price of 19 sen. Its opening premium was the second highest on Bursa year to date, after TT Vision's opening premium of 338.24%. By the close, the stock pared some of its gains to end the day at 25.5 sen apiece, still 34% higher than its listing price, for a market capitalization of 103.8 million ringgit. It saw some 308.2 million shares changing hands. Managing Director Dr. Lee Seng Kai said the listing will grant Glostrext greater financial flexibility to pursue future growth opportunities and enhance the group's reputation, as well as to retain and attract new skilled employees. Glostrext is in the business of providing piling, structural and geotechnical related services, covering instrumentation, testing and monitoring services to construction projects, as well as completed buildings and infrastructure. Its key geographical coverage includes Malaysia and Singapore. NIISe Corporation saw its share price close 17.7% lower at 7 sen today after the Home Ministry cancelled its contract for the National Integrated Immigration System, or NIISe. The counter was among the top most active stocks on Bursa, with 75.97 million shares trading hands against the group's average daily volume of 9.19 million shares and the volume recorded the day before of 2.53 million shares. At 7 sen a share, it had a market value of 215.71 million ringgit. In a bourse filing yesterday, NIISe said its wholly owned unit, NIISe Information Technology Systems, the appointed developer of the new immigration system, received the notice of termination. NIISe is in the midst of selling an 80% stake in the smart card manufacturer to TasTech Technologies. It said the axing of the contract is expected to have an impact on its financial performance for FY 2024. Fitch Ratings believes Putrajaya will advance subsidy rationalisation in Budget 2024, which is set to be tabled in Parliament on October 13th. This follows the status quo results seen in the recent state elections. According to a report by Bernama, the rating agency said Prime Minister Dato Sri Anwar Ibrahim's administration has already taken steps to reduce electricity subsidies for non-domestic users and high-voltage consumers, leaving the majority of households unaffected. It said fuel subsidies and most food subsidies have been maintained, and that broad removal of the assistance would be unpopular. Still, Fitch believes the election outcome could encourage the government to prioritise other aspects of the Madani agenda, such as those focused on containing living costs, boosting wage growth and improving welfare. It is also of the opinion that even if the authorities move ahead with some subsidy reforms, officials might be more generous with the offsetting assistance, as the government has some headroom to accommodate such spending.